let's move on and welcome on board Nimesh Chandan, the Chief Investment Officer at Bajaj Finserv Asset Management. Nimesh, hi, thanks so much for joining us and wishing you a very good afternoon. Give us a sense of your lowdown on the earnings that we've seen so far, because if I remember correctly, before the quarterly numbers started trickling in, the overall sentiment on the street for these numbers was very muted. But even if you just talk about the Nifty companies, the 10 of them that have come with their numbers so far, 4 have been a beat, 4 have been largely in line with what the street was expecting. So it's not looking all that bad, is it?
So you're absolutely right. We have started the season and only a few companies have reported yet, but it's been a mixed start. So I would say not too hot, not too cold. But the companies which have kind of given a certain cautious view, also say some companies in the banking sector also, the signs were visible. So it was not completely unexpected. So some signs were visible. The economy has gone through a sort of a transitory slowdown. And I believe that by next year, next financial year, we should see some pickup. So next year earnings will definitely be much better than what we've seen in FY25.
Earnings are expected to be better. Hi Nimesh, this is Shrishti also joining in. So earnings is definitely one big trigger that we have been tracking, but the another big development that even the world is eyeing at is Donald Trump inauguration. So wanted to understand that where do you see India has the opportunities in terms of some collaborations with the US, and what is your expectation that how Indian markets or rather emerging markets can perform given the kind of setup that we are seeing, that the US is, the markets also are on the strong footing while the emerging markets are seen to be a bit under pressure. Do you see that changing anytime soon?
So we hold a bit of a contrarian view here. While markets don't like uncertainty, and hence there could have been some selling from foreign institutions in the Indian market, waiting to see what President Trump will announce. But I believe that India is actually in a much favorable position as far as US is concerned. I think during the campaign also, there was a lot talked about tariffs on China rather than on India. And the debate on visas and everything also was addressed while, informally in some cases and formally in others. But I think those were addressed. So I don't expect much negative. However, the market is definitely positioned on a kind of a risk off till the time they hear the actual announcements. And I think markets should do better after these announcements. So we should see Indian markets seeing a bounce, maybe in a few days or a month. But I think things should be better for India going forward.
Sounds optimistic. Nimesh, we're 10 days away from the union budget. What are some of the key announcements or key sectors or areas that you are expecting the budget or the government to focus more on? Is it going to be rural consumption? Is it going to be the overall capex infra theme? Or what is your outlook on the budget?
I think this budget will not be doing any dramatic changes, but we do expect some kind of relief to the middle income group, the lower income group, salaried class, where there could be some tax benefits coming to them. What we need to see is how it is balanced on the other side. Where is the new revenue coming from? Because we have to adhere to fiscal consolidation path. So how does the finance minister balance giving some incentives and subsidies to the lower and the middle income? Is it compensated by slightly slower growth on capex? Is there some other revenue channel that the finance minister looks at? But still, I don't think markets are going with very high expectations. So that is actually a good environment to be in. If the markets go with very high expectations into the budget, then there could be some concerns.
Nimesh, we have covered a couple of topics with you, be it the Trump inauguration, budget, or maybe earnings. But Nimesh, just wanted to understand that given the market correction, definitely the valuations have also corrected. So at this point in time, if you can highlight some of the sectors that still look attractive to you at this price point.
So let's split it into a few different ways you cut the market. So first, in terms of market cap categories, we are bullish about large caps more than mid caps and small caps because we see valuation quite attractive in this category as a whole. So we believe it is interesting to now pick up companies on the large cap side. So that's among market cap. In terms of styles, we believe quality companies, quality as a style, as a factor, should do better in 2025 because the high growth rates have now moderated and the quality of earnings will become more important and the longevity of earnings will become more important for investors. So quality as a style is something that we look at. Third is let's look at sectors. Sectors with defensive growth. So for example, healthcare stands out in terms of not being affected by uncertainties globally or domestically. And there is a clear growth path available for domestic, for generics, and for CDMO players. So that's, I think, number one in terms of visibility and growth. The second sector which we like is IT. Next year is going to be better for IT with some, say, small variability based on how the US does. But still, we are looking at a better year for IT with some benefits from currency also coming in. The third sector we like is consumer sector. Here we believe valuations are attractive and possibly some trigger comes from the government side for FMCG. On the other side, we see real estate linked consumption sectors or building material sectors being attractive, right from cement to, say, consumer durables, tiles, faucets, all the building material companies. So this is the pecking order in which we are going. The other sectors, we want to be very selective, not looking at a top down on them.
Okay, Nimesh, thanks so much for sharing your outlook with us as well as the sectors that you're liking and you're bullish on. On that note, we'll let you go. Thanks so much for once again joining us and speaking to us on ET Now.
If you like this video, then like, share and subscribe to ET Now.